To keep yourself updated, subscribe to Indigo Learn and click the bell icon and download our app OneFin to start learning on the go.
Hello everyone. Let's now discuss the revision test paper for CA Foundation Paper 2 Business Laws for June 23 examination. Let's start with the first question. State which of the following agreements are valid under the Indian Contract Act 1872. So here we've been given different situations, and out of this you have to identify which of the contracts is a valid contract. The first one is A, who owns two cars, is selling red car to B, whereas B thinks he's purchasing the black car. So in this particular situation, if you look at the situation carefully, it is a case where there's no meeting of minds. Both the parties are thinking about two different cars. One is thinking about the red and the other is thinking about black. So there's no consensus addendum. So this is not a valid contract. Moving on to the next one. A threatened to shoot B if B does not lend him 2 lakh rupees and B agreed to it. So here the act happening is threatening. And as soon as we listen to this word threatening, as soon as we come across a situation like this, what comes to our mind is coercion. So this contract is created by using coercion. So again, this is not a valid contract. Moving on. A agrees to sell his house to B against 100 kgs of cocaine. So again, this is something which is illegal. It is not valid. A asks B if he wants to buy his bike for 50,000 rupees and B agrees to buy the bike. So this is a valid contract, meets all the requirements of a valid contract, and there's no other element present. So option D is a valid contract. Now moving on to the last part. Mr. X agrees to write a book with a publisher, but after a few days, X dies in an accident. So what has happened here? The contract was initially valid, but with Mr. X's death, the contract is no longer enforceable. So this contract is not a valid contract. It is a void contract. So this was the first question, a very simple one. Moving on to the next one. So the next question is based on appropriation of payment, a very important concept under the Indian Contract Act. Let's have a look at it. Mr. Harish owes payment of 3 bills to Mr. Ashish on 31st March 2022. So Harish has to make payment of 3 bills to Mr. Ashish as on 31st of March 22. The first one is 12,120, which was due in May 2018. The second one is 5650 due in August 2020. And the last one is 9680, which was due in May 2021. Mr. Harish made a payment on 1st April without any notice how to appropriate them. The payment was as follows: one check of rupees 9680 and the other of 15,000. Now, you have to advise as per the provisions of Indian Contract Act. Now, in this particular situation, what generally happens is when you studied about appropriation of payment, when we discussed about it, we know that the payment has to be appropriated as per the debtor's instructions or as per the debtor's directions. But in a situation where the debtor does not specify anything, then the creditor, as per his discretion, can appropriate the payment as he wants to. However, in a situation wherein both of them do not do anything, then the payments will be appropriated in the order of time as the debt was taken. Now, in this particular case, the first check received is of an amount of 9680, and there's also an amount which was borrowed by Mr. Harish of 9680. Now, Harish has not mentioned anything, but however, a check amounting to a same amount which was due by him basically signifies that his intention was to clear out this last debt of 9680. So this amount of 9680 will be utilized to settle this payment of the third debt due of 9680. Now, talking about how will the appropriation of the remaining 15,000 rupees happen? Now, the remaining 15,000 rupees, nothing has been mentioned by Mr. Harish. So how can this be done? Mr. Ashish can appropriate it in any manner. And again, the appropriation can be done with respect to any payment, even if it is time barred. So now in this particular situation, there are two payments left. One is 5,650, which was due in August 2020. And the other is 12,120, which was due in May 2018. So, but obvious, we utilize this 15,000 first to satisfy this payment of 12,120, and whatever amount is left will be adjusted out of the remaining amount of 5,650. So out of 15,000, we'll first clear out this payment of 12,120, which was due in May 18, and the remaining amount left will be settled against this debt due of 5,650. So this is how you had to answer this. Moving on to the next question. Mr. Shyam Mundra was a big businessman having one son and one married daughter. He decided to gift his house to his daughter. For this purpose, he called his lawyer at his house and he also made a written document for the gift. So he wanted to gift his house to his daughter, so he's made a written document for it. The lawyer advised him to transfer document properly registered. So the lawyer also advised him that get the registration done. When they both were going for registration, they met with an accident and both of them died. So what has happened here in the situation? There's a written document, but it is not registered. Later, the daughter found the document and claimed the house on the basis of that document. Explain whether she can get the house as a gift under the Indian Contract Act 1872. Now, here in this situation, this is a contract which is made out of natural love and affection. And we know that contracts made out of natural love and affection will be valid, even if there's no consideration. However, certain conditions have to be complied with. One is that there has to be a close relationship between the parties. Apart from it, the agreement has to be in writing and it should be registered. In this situation, the agreement is in writing. There is a written document for transfer, but the transfer has not been registered. So in this situation, Mr. Shyam's daughter, she cannot claim the house as a gift even on the basis of the written document because the document has not been registered. So in this particular situation, the daughter, though she has the document, she does not have the right to claim the house. She cannot get the house as a gift because the document was not registered. Moving on. Mr. Mukund wants to sell his car. For this purpose, he appoints Mr. Path, a minor, as his agent. Now, we all know that an agreement with a minor is void ab initio. That is void from the very beginning. However, a minor can act as an agent of a person. There's no prohibition on that. A minor can act as an agent. So here, Mr. Mukund, he wants to sell his car, and for that, he has appointed Mr. Path as his agent. So there's no problem with that. Mr. Mukund instructs Mr. Path that the car should not be sold at a price less than 2 lakhs. So he has set a minimum price for which the car has to be sold, and that is 2 lakh rupees. Mr. Path ignores the instruction of Mr. Mukund and sells the car to Mr. Naman for 1,50,000. So here, the minimum price set by Mr. Mukund was 2 lakh. However, the minor, Mr. Path, he ignores the instructions and sells the car for 1,50,000. Explain the legal position under the Indian Contract Act. The first question is, can Mr. Mukund recover the loss of 50,000 from Path? So in this situation, Mr. Path, he's the minor, he's acting as Mr. Mukund's agent. However, when a minor is appointed as an agent, the minor is not liable to the principal for the act for his acts. So the minor there will be no personal liability of the minor. So in this situation, Mr. Mukund, he cannot recover this loss of 50,000 from Mr. Path. Now the second question asks us, Mr. Mukund, can he recover his car from Mr. Naman? So Mr. Naman, he has purchased the car in good faith from Mr. Path. So in this situation, Mr. Mukund cannot recover the car from Mr. Naman as well. So now Mr. Mukund can neither recover the loss of 50,000 from Path and he cannot recover his car from Mr. Naman. Moving on to the next question. Mukesh is running a grocery store in Delhi. He sells his grocery business, including goodwill worth $1 lakh to Rohit for a sum of 5 lakh. After the sale of goodwill, Rohit made an agreement with Mukesh. As per this agreement, Mukesh cannot open another grocery store, that is a similar kind of business, in whole of India for the next 10 years. Now, we know that restricting someone from carrying out a lawful business is void. It is in void agreement. Agreement and restraint of trade is void. However, in certain situations, a reasonable restriction can be put on the other party. And yes, sale of goodwill is a case wherein a reasonable restriction can be put. However, the restriction has to be reasonable, wherein the restriction could be with respect to a certain number of years. However, the restriction could be within specified local limits, not the entire country. Here, the restriction which is being put on Mr. Mukesh is he cannot carry out the same business in whole of India, that is in the entire country, for the next 10 years. Now, do you think this restriction is reasonable? Definitely not. This is an unreasonable restriction. So this is not a valid restriction. However, Mukesh opens another store in the same city 2 months later. What are the rights available with Rohit regarding the restriction imposed on Mukesh? So here the restriction which was imposed on Mukesh was an unreasonable one. So Mr. Rohit, he cannot take any action against Mr. Mukesh with respect to the restriction which he imposed on him. Moving on, P left his carriage on D's premises. Landlord of D seized the carriage against the rent due from D. P paid the rent and got his carriage released. Can P recover the amount from D? So here this particular question is based on section 69, that is payment by an interested person. So here P left his carriage on D's premises. The landlord had to recover the rent from Mr. D. The actual liability was of Mr. D. However, P wanted to get his carriage back, to get his carriage released, because of which Mr. P pays the rent, which was actually the liability of D. So here in this situation, P can recover the amount which he has paid on behalf of D. Moving on to the next question. Avyukt purchased 100 kgs of wheat from Bhaskar at 30 rupees per kg. Bhaskar says that wheat is in his warehouse in the custody of Kishore, the warehouse keeper. Kishore confirmed Avyukt that he can take the delivery of wheat from him. Until then, he's holding wheat on Avyukt's behalf. So now, as you all know, that there are 3 types of delivery which happens under the Sale of Goods Act. One is actual delivery, the other is symbolic delivery, and the last one is constructive delivery. Now, in this situation, the type of delivery which is happening is delivery by acknowledgement, and this is a constructive delivery. So as soon as the warehouse keeper, he informs Mr. Avyukt that he's holding the wheat on his behalf, the delivery has happened. So this is a constructive delivery which has happened in this case. Before Avyukt picks the goods from warehouse, the whole wheat in the warehouse has flowed in flood. Now, Avyukt wants his price on the contention that no delivery has been done by the seller. Now, since the goods have been flowed in the flood, Avyukt, he wants to claim the price for the goods, and he contends that there's no actual delivery which has been made by the seller. So can Avyukt do this, whether Avyukt is right? So the answer here is no, Avyukt is not right. Since the delivery has already been made, there's constructive delivery which happened in this particular situation. Moving on to the next question. Priyansh orders an iron window to an iron merchant for his new house. Iron merchant sends his technician to take the size of the windows. The technician comes at the site and takes the size of the area where the window is to be fitted. So the technician comes and takes the size. Afterwards, the iron merchant, on discussion with his technician, intimates Piyush that the cost will be 5,000 rupees and he will take 1,000 rupees as advance. So he informs him about the cost and the advance. Priyansh gives 1,000 rupees as advance and rest after fitting of window. After 3 days, when technician tried to fit the window made by him at the site of Priyansh, it was noticed that the size was not proper. So the technician had come, he had taken the size, but at the time of fitting, they realized that the size is not proper. Priyansh requests the iron merchant either to remove the defect or return his advance. The iron merchant replies that the window was specifically made for his site and the defect cannot be removed, nor can it be of any other use. So here in the situation, what is happening? The iron merchant, he refuses to refund, or he says that this window has been specifically made for your site, so we cannot remove the defect. So I'll also not refund the advance money. Rather, Priyansh should give him the balance of 4,000 rupees. State with reasons under the provisions of Sale of Goods Act whether Priyansh can take his advance back. So here there's a condition whenever the sale of good is being made, there's a condition as to merchantability. The good which has been sold shall be of a proper quality, shall be of a good quality. Now here in the situation, the window size, everything was taken by the technician, but when they were finally fitting the windows, the window turned out to be of inappropriate size. So in this particular situation, Mr. Priyansh, he has got the right to avoid the contract, and he can also claim the money back. He can also demand the refund of the advance amount which he has paid. So in this particular situation, the buyer, he can avoid the contract and also can demand the refund, claim the refund. Moving on to the next question. Ayushman is the owner of a residential property situated at Indraprasth Marg in New Delhi. He wants to sell this property. For this purposes, he appoints Ravi, a mercantile agent, with a condition that Ravi will not sell the house at a price less than 5 crores. Ravi sells the house for 4 crores to Mudit, who buys it in good faith. Ravi misappropriated the money received from Mudit. Ayushman files a suit against Mudit to recover his property. Decide with reasons can Ayushman do so under the Sale of Goods Act. So here what has happened, the sale is being made by a mercantile agent. A mercantile agent is basically a person who is appointed by the seller, acts on behalf of the seller, has the possession of the property of the seller with the seller's consent, and any person who is purchasing anything from the mercantile agent will get a good title to the goods which are being sold. So in this situation, Ayushman, he cannot recover the property from Mudit because Mudit has purchased the property in good faith. However, he can recover the loss from his mercantile agent, Mr. Ravi. So in this particular situation, what can be done? Ayushman cannot recover property. The conclusion to this question would be cannot recover the property from Mudit. However, he can recover loss from Ravi. Moving on to the next question. A agrees to sell certain goods to B on a certain date on 10 days credit. The period of 10 days expired and goods were still in the possession of A. So A still has the possession of goods. B has also not paid the price of the goods, which means A is an unpaid seller because he has not received the price of the goods. B becomes insolvent. Now here the buyer has become insolvent. A refuses to deliver the goods to exercise his right of lien on the goods. Can he do so under the Sale of Goods Act? Yes, definitely he can. Right of lien can be exercised in a situation either where the goods have been sold on credit or in case of a cash sale. However, one very important condition to be satisfied here is that the seller should be in the possession of goods. And when the seller has the possession of goods, he can exercise his right of lien. And here also the buyer has become insolvent. So the seller can definitely exercise his right of lien. The next question is a straightforward question, direct question, asking us the difference between sale and agreement to sell. So what is the difference between sale and agreement to sell? Not a lot of discussion required here. So this is a basic question wherein you just have to write the differences. Moving on to the next one. Mr. Ram and Mr. Rahim are working as teacher in Ishwar Chand Vidyasagar Higher Secondary School and are also very good friends. They jointly purchased a flat which was given on rent to Mr. John. It was decided between landlords and tenant that the rent would be 10,000 per month, inclusive of electricity bill. Means electricity bill will be paid by the landlords. The landlords by mistake did not pay the electricity bill for the month of March 21. Due to this, the department cut the connection of Mr. John, and Mr. John has to pay the electricity bill of 2,800 and 200 is penalty to resume the electricity connection. So this was the situation which happened. Mr. John claimed 3,000 from Ram, but Mr. Ram replied that he is liable only for 1,500. Mr. John said that Mr. Ram and Rahim are partners, and therefore he can claim the full amount from any of the partner. Explain whether under the provisions of Indian Partnership Act, Ram is liable to pay the whole amount of 3,000 to Mr. John. Now here, the first thing which comes up here is that whether Mr. Ram and Rahim are actually partners. So if we look at the situation here, Mr. Ram and Rahim, they've jointly purchased a property, and they have lent that property to a particular person. They are not carrying on a business. There's no business which is being carried out, and there's nothing which is being done for the purpose of earning profit. They just have purchased a property, and that property has been let out. So in this situation, the first point to be considered is that Ram and Rahim are not partners. They have jointly purchased a flat. They are joint owners, they are co-owners, and they are sharing the rent which is received. So similarly here, this 3,000, out of this 3,000, Mr. Ram is liable to pay only rupees 1,500 and not more than that. So they are jointly liable towards this 15,000 on the basis of their co-ownership. So Mr. John, he can claim 1,500 from Ram and the remaining 1,500 from Rahim. He cannot claim the entire amount only from one person, because this is not a partnership, this is co-ownership. So here the relationship between Ram and Rahim is of co-owners and not partners. So in this particular case, John can claim only 1,500 from Ram, and the remaining 1,500 amount he'll have to claim from Rahim. Moving on to the next question. Shyam, Mohan and Keshav were partners in Messrs. Nandlal, Gopalwale and Company. They mutually decided that Shyam will take the responsibility to sell the goods, Mohan will do purchase of goods for firm, and Keshav will look after accounts and banking department. No one will interfere in each other's departments. Once when Shyam and Keshav were out of town, Mohan got information that price of their good is going down sharply due to some government policy, which would result in heavy loss to the firm if goods are not sold immediately. So what happened? All three of them divided the work between themselves. Each one was looking at a different thing. However, one fine day when Shyam and Keshav were not in the town, Mohan gets an information that the price of the goods which the firm is dealing in is going down drastically, and if they do not sell the goods right now, the firm will have to face heavy losses. So the goods have to be sold immediately. He tried to contact Shyam, who has the authority to sell the goods. When Mohan could not contact Shyam, he sold all the goods at some reduced price to save the firm from heavy loss. So what Mohan does is, as a man of ordinary prudence, he first tries contacting Shyam. However, when Shyam does not respond, when he's not able to reach Shyam, he sells the goods at reduced price to save the firm from heavy losses. Thereafter, Shyam and Keshav denied accepting the loss due to sale of goods at reduced price, as it's only Shyam who has the express authority to sell the goods. Now, discuss the consequences under the provisions of the Indian Partnership Act 1932. Now here, as per Section 20 and 21, if we talk about Section 20 and 21 of the Indian Partnership Act, every partner can bind the other partner with the act which he is doing, and every partner should act within his authority or within the powers which have been entrusted to him. However, in certain situation, in certain emergency situation, the partner has the authority to do every act which he can in order to protect the firm from loss, and that is what has been done by Mr. Mohan in this situation. If Mr. Mohan would not have sold the goods, then the firm would have to incur heavy losses. So in order to protect the firm from facing heavy losses, Mohan, he sells the good. He does everything. He tries contacting Shyam, but to no avail. And the last resort which Mohan had was to sell the goods. So Mohan here acts as a man of ordinary prudence, and he acts in an emergency situation to save the firm from heavy losses. So in this situation, Mr. Mohan's act will definitely bind the firm. So Mohan's act will bind the firm. Shyam and Keshav cannot get away with their responsibility. Moving on to the next question. X and Y were partners in a firm. Firm was dissolved on 12th June, but no public notice was given. So the firm was dissolved, but no public notice of dissolution was given. Thereafter, X purchased some goods in the firm's name from Z, and Z was ignorant to the fact of dissolution. So X purchases goods in the name of the firm from Z, and Z was not aware that the firm has dissolved. X became insolvent and Z filed a suit against Y to recover his amount. State with reasons whether Y would be liable under the provisions of Indian Partnership Act. So the answer here is yes, Y will be liable. The reason being very simple: no public notice of dissolution was given, and since no public notice was given, the firm was still very much in existence for the outsiders. And here Z was also not aware of the fact that the firm has been dissolved. So in this particular situation, the act of Mr. X will bind Mr. Y as well. So the partners are bound until the notice of dissolution, until a public notice of dissolution is given. So in this situation, since no public notice has been given, the partners are still liable. Moving on to the next question. State the modes by which a partner may transfer his interest in the firm in favor of another person. So here again, this is a direct question asking us to state the ways in which a partner can transfer his interest or the share in property. So it can either be by way of sale, mortgage, or any other thing. The partner can transfer his interest in favor of another person. And talking about the rights of the transferee, he cannot interfere in the conduct of the business. He cannot require the accounts or inspect the books of accounts of the firm. However, he is entitled to the share of profit of the partner, the interest which the other partner has transferred. He is entitled to that particular share. So that's again a direct question. So let's move on to the next one. Explain the small limited liability partnership under the LLP Act. So here you just have to give the details about small LLP. So there are two parameters or through threshold limits specified. One is with respect to the contribution. The other is with respect to the turnover. The contribution should not exceed 25 lakhs. Turnover should not exceed 40 lakhs. Then we say that the partnership is a small limited liability partnership. Moving on to the next question. In the Flower Fans Private Limited, there are only 5 members. All of them go in a boat on a pleasure trip into an open sea. The boat capsizes and all of them died being drowned. Is Flower Fans Private Limited no longer in existence? The answer is definitely no. The company is still in existence because the company enjoys perpetual succession. The members may come, members may go, but the company goes on and on. There's no end to the company unless and until it is legally wound up. So in this particular situation, the company enjoys perpetual succession, and just because all the members have died does not mean that the company will also lose its existence. Further, is it correct to say that the company, being an artificial person, cannot own property and cannot be sued or be sued? Definitely not. This is an incorrect statement, because a company, it is an artificial person which is created by law. It has a legal entity, separate entity, wherein it can own property in its own name and also can sue someone else and also can be sued upon in its own name. So the statement is not a correct one. Moving on. ABC Limited was into sale and purchase of iron rods. This was the main object of the company in its MOA. The company entered into contract with Mr. John for finance-related work. The MOA stated sale and purchase of iron rods. However, the company entered into a contract which was related to finance, which is nowhere mentioned in the MOA. Later on, company repudiated the contract because it is ultra vires. With reference to the same, briefly explain the doctrine of ultra vires. What are the consequences of ultra vires acts of the company? So the doctrine of ultra vires basically emphasizes on a particular point, and that is the company cannot do anything which is beyond its powers or beyond its object. And if a company does or enters into a contract which is beyond its powers, then that contract will be null and void. And that is what will happen in this situation as well with ABC Limited. The contract made between ABC Limited and Mr. John is null and void. It has no legal effect. The reason is The MOA gives the object and scope and powers of the company, and the company cannot do anything which is ultra vires, that is beyond the powers. So here they've just asked us about explanation of doctrine of ultra vires and what are the consequences of the Ultra Vires Act. If an act is ultra vires the memorandum, it cannot be ratified even with the unanimous consent of all the shareholders. So there's no ratification possible in case of an ultra vires act. Moving on to the next question. Articles of Association of XYZ Private Limited provide that Board of Directors can take a loan up to 5 lakh for the company by passing a board resolution. In that case, loan amount is in excess of the limit. Special resolution is required to be passed in general meeting. So the loan amount specified is 5 lakh, and if any amount more than 5 lakh have to be sanctioned, then special resolution is required. Due to urgent need of funds, Board of Director applied for loan in a reputed bank for 10 lakh rupees without passing resolution in the general meeting. So they forget to pass a resolution in the general meeting with respect to this loan of 10 lakh rupees. BOD gave an undertaking to the bank that special resolution has been passed for the loan. So the board, it gives an undertaking that we've passed a special resolution for the loan. The bank, on believing on such undertaking, lend the money. On demanding the repayment of loan, company denied the payment as the act was ultra vires to the company. Can kindly advise. So here what is happening? The directors, they were authorized to purchase to give a loan, take a loan up to 5 lakh. However, they take a loan for 10 lakh, for which a special resolution was required. Now we all know there's another doctrine, and that is doctrine of endowment management, which basically says that the person who, outsiders who are dealing with the company, they'll not know what is happening internally within the company. So now in this, and this type of case happened in the case law of Royal British Bank versus Turquand as well. So in this particular case, on the basis of the provisions of doctrine of endowment management, the bank can claim the amount of his loan from the company, and the bank can believe on the undertaking given by the board and no need to inquire any further. So the bank is definitely entitled to recover the amount of 10 lakh from XYZ Private Limited. Moving on to the last question now. Explain the classification of companies on the basis of control as per the Companies Act 2013. So on the basis of control, the companies would be holding company, subsidiary company, and joint and associate company. So holding company, subsidiary company, and associate company, this is a direct question when we just have to directly give information about holding company, subsidiary company, and an associate company. So this was with respect to your revision test paper of June 23 examinations. We've discussed the entire paper in a brief manner, and there were a few new concepts, few new questions rather, which were not asked upon previously in any examinations. So they have touched upon each and every corner in this particular revision test paper, a very interesting one, and I would say I would request all of you all to please do a good writing practice for this particular revision test paper, because this covers almost all the important concepts and also some new concepts which were not a part of previous revision test papers. So with this, we've completed the entire revision test papers. All the very best to all of you all for your examination, and stay connected with us. For any queries, you can always reach out to us on forums and we are happy to help. Thank you and all the very best.